The famous Mannheim Used Vehicle Index experienced its biggest drop ever. Prices decreased by 14.9% compared to 1 year ago. While that's great news if you're in the market for a new car, it might be wise to temper your expectations. Cars are still extremely expensive and low-income groups are basically pushed out of the market. However, many of the current trends seem to indicate that prices will still drop a bit further. In this video we'll have a look at the latest developments in the car prices, the drivers behind the price changes, what this means for the future, and if it's a good moment to buy a car. Let's start by looking at the price changes. Over here we have the Mannheim Used Vehicle Index, and this index shows the price changes in the used wholesale prices. If it's your first time seeing this price development, you can see that the trend is upwards, as prices tend to increase slightly less than inflation. There are, however, periods where prices deviate from the trend. Look for example at the 2008 financial crisis. While the drop might have seemed extreme at the time, it is insignificant compared to the increase that started in 2020. Prices dropped in the beginning of the pandemic as there was a lot of uncertainty, but they quickly recovered and surged to historic heights. Demand increased as disposable income rose, and new car supply decreased following poor supply chain management and later the chip shortages. All of this resulted in a perfect storm and caused prices to increase by 47% during 2021. But history taught us that these extreme increases cannot go on forever. Prices peaked in January 2022 and then decreased. In fact, as you can see from the graph, the drop in prices is the largest decrease ever. Compared to 1 year ago, wholesale prices dropped by 14.9% and cars in general saw above normal depreciation rates. While this sounds spectacular, especially if you're in the market for a car, the reality is rather disappointing. As you can see, cars are still extremely expensive, and the fact that we just experienced the largest drop ever doesn't mean so much. After all, prices also increased by unprecedented numbers. For buyers though, it is a push in the right direction. Moreover, it also applies to the retail prices, not just the wholesale prices. Now if we zoom in to the price decrease, we can see that it applies to all sorts of cars. Over here we can see the 2022 value indices for different model types. And I included this to show the remarkable development in the compact and mid-size segment. In the beginning of 2022, these cars followed the initial market depreciation trend, but when petrol prices soared, values for compact and mid-size cars followed. You can clearly see the difference over here. But the inverse is also true. When petrol prices came down, the value for these cars followed. We can then also see that since week 25, all cars depreciated at approximately the same rate. So we saw now that, like many sectors of the economy, used car prices have been spiraling lately. Prices are down a whopping 14.9% in the last 12 months, according to the Mannheim Used Vehicle Value Index. But there's always an opportunity for money to be made if you know where to look. Just like car collectors can profit from trading vintage Porsches and Ferraris, like I told you about a couple weeks ago, you can potentially do the same with contemporary art. Today's sponsor is Masterworks, a fintech startup in New York City's financial district, and they help you to do just that. They allow you to invest in shares of contemporary art from legendary artists like Picasso, Monet, and Banksy. These are like the Ferrari Testarossa, 250 short wheelbase, 300 SL, or McLaren F1. For a fraction of the artwork's full cost, you get the potential benefit of the price appreciation, and Masterworks knows what they're doing. In the last 12 months, when markets were getting crushed, Masterworks saw returns of 9, 10, 13, 17, 21, 27, 33, 35, and 36%. And with results like these, they've caught the eye of outlets from CNBC to CNN and the New York Times. Over 617,000 people have signed up so far, and demand is so high that they're looking to acquire more art on a weekly basis. But my subscribers can claim a free, no obligation account at the link in the video description. So if this sounds like music to your ears, head over to the video description and sign up for Masterworks. And with that we go back to the car prices. We saw that prices came down, but what caused prices to decrease and what does this mean for the future? Well, to put it simple, it must mean that supply was larger than demand. So let's dive into the details. We start with the demand side. Over here we have the weekly retail sales for used cars. Each line represents a different year, so we can check how 2022 compares to 2021, 2020 and 2019. And doing this, we can see that 2022 sales increased in the beginning of the year, following tax refund season, but are overall much lower than during 2021. It is not so hard to come up with reasons for this low level. First, the affordability of a used car decreased significantly. Prices are high and also interest rates are way up. Both of these factors of course have a detrimental effect on the monthly payments and the credit availability. If we have a quick look at this credit availability for auto loans, we can see that it has been decreasing during 2022. So this matches with the decrease in sales. Second, many people are just fed up with these high prices and are not willing to pay this much for a used car. A survey conducted by Cox Automotive shows that high prices were a key factor that explained the decrease in the overall car buying satisfaction score. More than half of the participants thought that prices were higher than expected and paid more than anticipated. Alright, but what about the supply side then? Well, things might be less tight over there than you might have expected. Over here we can see the used supply levels for different years. Looking at the red line, so the values for 2022, we can see that it is still far below 2019. And that's basically the last normal year. So things are not even close to normal. Commercial supply is, for example, still extremely low, and the expectancy is that it remains subdued for the upcoming 3 years. However, we can also see that supply was less tight than in 2021. Dealers bought a lot of stock at the beginning of the year, pushing supply to 2.6 million cars. It remained fairly stable throughout the year, but decreased quite a bit towards the end. So we saw now that demand was lower in 2022 than in 2021, but that supply was higher in 2022 than in 2021. And both of these developments are neatly represented in the day supply graph. The day supply shows the average days it takes to sell a car and is therefore a good indicator of the hotness of the market. Looking at the red line, so the one for 2022, we can see that the number was above the one for 2021, but also above the one for 2019. In other words, the market was oversupplied for the majority of 2022, and this of course explains the price decreases that we saw. However, we can also see that the day supply is approaching normal levels, and this could indicate that the most severe price drops are behind us. Now, one thing that we cannot forget is that the used car market doesn't function in isolation. It's also heavily influenced by what's happening in the new car market. So let's figure out what's going on over there. Over here we can see the price index for the used and the new cars, and this reveals that prices for new cars continue to increase while used car prices decreased. The average transaction price for a new car sits now above $49,000. Besides the fact that manufacturers are focusing on the high-end segment, it are also simply the prices that are increasing. However, this does not mean that things aren't improving in the new car market. As we all know, it was the supply shortage that acted as a catalyst for the price increases. Looking at the supply situation though, we can see that the situation drastically improved during 2022. Supply is 66% higher than during 2021. But let's not kid ourselves here. Supply is still far below the levels that we saw in 2019, and this had some small effect on prices. To be more precise, the prices after incentives. The green line shows the price relative to MSRP, so this means that a value over 100% shows that cars are selling for more than MSRP. As you can see, this has been the case since the beginning of 2021. Yet, since the summer of 2022, transaction prices are decreasing. Yes, very slowly, but they are coming down. Simultaneously, we can see that the incentive share of the transaction price increased slightly. It's quite interesting though that there are large differences between the brands. They increased at BMW and Jeep, but decreased for example at Subaru and Toyota. So why aren't prices plummeting like in the used market? even though that supply is increasing. The reason is simple. Relative to demand, supply is still low. When we look at the day supply for the new car market, we can see that 2022 values are now finally above 2021 values, but still far removed from 2019 values. So this looks completely different than the graph in the used car market. However, the decrease in the scarcity level for new cars will eventually trickle down to the used car market, hereby further pressuring the prices. And this effect could be accelerated by the unaffordability of new cars. The new vehicle affordability index just set a new high at 44 weeks. So this means that most people need 44 weeks of income to buy a new car. Prices and interest rates increased much faster than income levels. The typical monthly payment sits now at $777, and also this is a new record. And with that, it's time to wrap up and conclude and talk about future prices. Used car prices decreased by the largest amount ever, but this drop is only small compared to the increase. Now the drop followed from an improvement in the supply situation and decrease in demand. So what does this mean for 2023? The experts at Cox Automotive are forecasting prices to drop by 4.3%, but they predict that this will happen with a U-shaped pattern. Tax refunds are anticipated to be relatively low this year, and interest rates are expected to increase in the first half of the year. Combining these two factors, used car prices should decrease by 6% in the first half of the year. In the second part of the year though, used car prices are expected to increase slightly. This follows from a halt in the increase in interest rates. So how much value should we attach to this forecast? Last year they predicted prices to come down by 3%, but it turned out to be 14.9%. They aren't the only ones who were off though. KPMG predicted a drop between 20 and 30%. Moreover, prices in January didn't develop in line with the forecasted 4.3% decrease. In fact, prices increased by 1.5%. So it is perhaps a bit unnecessary to say, but I will say it nonetheless. All of these forecasts are surrounded by a lot of uncertainty, and you should interpret them as such. But what should you do with all of this in practical terms? Well, if you need a car right now, there's no way around it. You need to buy a car. However, if you can wait, I think it makes sense to do so. The price trend is still down and depreciation rates are elevated, so buying a car right now could mean that you're buying a falling knife. I therefore think that it makes sense to monitor the situation closely and to assess if the increase is just a little bounce or the new market bottom. And with that we arrived at the end of this video. Now if you enjoyed this video, please support the channel by clicking on the like button down below. Thank you. Also, if you enjoyed this data-driven way of analyzing a car market, but would like to see an analysis for a specific car, head over to my channel. Over there you will find many market analysis for a large variety of cars. As always, thank you for watching, and I hope to see you next week for a new video.